Good morning, Paul Georgie from Allendale. It's October 27th, 2010. Looks like we're going to start the day in the grains a little bit lower here. We've had kind of a reversal of trading overnight, where we started out the night session higher, and when we ended here at 7:15, we were lower on the corn, soybeans, just slightly lower on the wheat, however. But a lot of this is coming from the outside markets. The dollar is up 24 points right now at around the $78 area in the December contract. Technically, in the December contract, if we take out the 78.61 area, kind of a critical point, swing point on the charts, closing above that 78.61 could activate a lot more buy stops, pushing that market higher, as it would be breaking this long-term downtrend that we've been in. Monitoring that very closely here today. Crude oil down 71. Some of the news items that we got ahead of us in the outside markets that seem to be affecting overall commodity prices is we've got Fed meetings next week. They believe that they're going to be doing some more quantitative easing, putting more money into the system. This morning we're talking about several $100 million. Yesterday they were talking about $1 trillion. The big concern is, what are they going to put into the system, and how much quantitative easing are they going to influence this market by? The other things we've got going next week, we've got an election coming up here in the U.S. on the Tuesday of next week. We've also got the supply-demand report the following week from the USDA. So a lot of data coming out here that could impact the direction of these markets. Individually, corn market is concerned about yield. We've got the Newswires did a survey yesterday, 154.9. That's only about 9/10 of a bushel less than what the USDA had last week. We think that the trade's probably trading a lot more of a break than that. So only a 9/10 of a bushel change in yield actually may not be looked at as that bullish of a number. In beans, China came in last night and bought 200,000 tons of soybean oil from Brazil and Argentina. That, I think, could changing the attitude of traders here in the U.S., that they've been continuously buying soybeans from the U.S., and concern there that maybe their port facilities are going to be overwhelmed with product here. We'll start to hear stories like that. So seeing them make a big purchase out of South America gets U.S. traders a bit nervous here, and could be a reason for the sell-off here today. Other news in the wheat, Asia is said to be looking to Australia for feed wheat. All of the wheat that they normally purchase out of the Ukraine that is not going to be exported, they're now looking to Australia for that because of the excessive amounts of rain and the bumper crop that they've got in eastern Australia. There should be plenty of a supply of feed wheat located there, so they're going there to buy wheat rather than to the U.S. So these are some things that normally would be considered bullish, now have got a bearish twist to them. The grain markets also have been overbought. Technically, a sell-off not out of the question. As we go into the end of the month, another evening of positions by traders could be a reason for this sell-off, and things to watch here today. In the livestock trade, we got cash cattle at a standstill yet. Cutouts were lower in the choice, down 164. Select down 20. It appears like this buying frenzy of product has slowed down. The demand for holiday bookings have slowed down here in the beef. We've got Also, the first of the month coming up, a lot of packers have contract cattle they can pull ahead, making them a little tougher to deal with here in the feedlot areas. We expect that we will trade cash cattle here, probably more like a steady trade than higher trade, what was thought to be a possibility early in the week. The pork trade down 111 on the cutout value. Cash hogs are weaker, continuing to see pressure there. Product is, or demand for product is very weak right now. We've got an oversupply. The USDA release of the numbers here last week that we had more pork in storage at a time when we had less hog slaughter. Not a good sign. And also you've got technical and fund selling that has been pressuring hog futures. We're a bit concerned, and that's something that we're watching very closely here in the cattle. This 99.75 area in the D's contract, watch that very closely. If we close below there, we could activate a lot more sell stops and scare some of the long fund positions out of the cattle market. So watch that with caution and be able to act if those things are happening. If you got any questions, give us a call here at Allendale at 800-262-7538. I want to remind everybody we still have our special pricing for our conference through the end of this week, through the end of the month, $99. Normally it's $149. You can go to the website, sign up, or just give us a call, and we can get you signed up and save your place here for our conference on January 21st and 22nd. We wish everybody a very successful trading day. We'll talk to you tomorrow morning. Thank you.